If you want to make money in the stock market, you need to start by understanding your strategy. As a passive investor, your goal is just to own a piece of the market, and we have seen that the stock market has grown by an average of 10% a year. Now, this doesn't mean the markets go up. In fact, we know that recessions happen and we know that market crashes happen. Over the last 100 years, we have seen 16 recessions. Over the last 100 years, we've seen 25 stock market crashes, and by stock market crash, I mean a bear market when the stock market has fallen by 20% or more. So yes, the stock market falls, but despite these crashes, despite these recessions, the stock market has risen by around 10% a year. Now, there's a lot of different ways that you can invest in the stock market. One common way is the S&P 500. This is a group of the 500 largest companies in the stock market. And you don't have to go out and actually invest in each one of these 500 companies because there are funds out there that will give you exposure to the S&P 500 and you really don't have to do any of the work. Now, I'm not telling you what to invest in. I don't recommend what I do to anybody else. Investing is risky and you're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But a couple examples of ETFs, which are exchange traded funds that you can invest in on pretty much any brokerage out there that will give you exposure to the S&P 500 include SPY and VOO. As a disclaimer, I am personally invested in VOO. These are two different ETFs, meaning two different funds that if you bought one of these funds, you're getting exposure to the 500 largest companies in the stock market. Now, as of today, at the time we're recording this video, Amazon is one of those 500 largest companies, which means when you buy any one of these, you're buying Amazon, you're buying Apple, you're buying Nvidia. But the reason why I'm saying this is if Amazon were to have really bad products tomorrow, the CEO runs the company into the ground, and now they're on the verge of bankruptcy. Well, if you invested in the Amazon stock yourself, you would lose a lot of money, and now you have to think about what you want to do. With this, it's passive. And what that means is this fund will then kick Amazon out and replace it with another company, and you don't have to do anything. That's the advantage of investing into something like this, a fund, and it's passive, meaning you don't have to really do anything. You just have to keep investing in this fund. And we know that historically, the S&P 500 has averaged 10% a year. Does this mean the markets go up by 10% every single year? No, but after you factor in the booms and the recessions, it averages out to 10% a year. Now, when you do the math, that means if you invest $1,000 a month every year for the next 30 years, with this 10% of return, you're going to have around $1.9 million at the end of those 30 years. Now, maybe that's a good number for you, maybe that's not a good number for you, but you can adjust these numbers by either investing more or working to get better returns. But the whole idea here, if you want to win, is you need to follow something like ABB. This is a phrase that I coined, stands for always be buying. If you want to win in the S&P 500, if you want to win as a passive investor, the way you win is by following ABB. And what that means is every week, every 2 weeks, or every month, you pick the cadence, you're just going to keep buying. And you're going to buy when markets are up and when markets are down. You're going to buy when there's a boom economy and it's a recession economy. You're going to buy when there's a Democrat in the White House and when there's a Republican in the White House. You're going to buy when it's raining. You're going to buy when it's snowing. You're going to buy when it's sunny. The reason why I emphasize this is because anytime you see a market pullback, the people that want to be passive investors say, oh my God, Jaspreet, the market is down. Should I sell? What do we do? And the only thing you want to change when markets are down is maybe you buy even more. Because recessions and market crashes create some of the best investment opportunities of ever, because they let you buy good investments at a discounted price for the financially savvy that are prepared. And this is where the way you win here is just let the markets do their thing and keep buying, and you do this for decades. And this has been a proven strategy to make people wealthy, because we know that over the long run, markets always go up. That doesn't mean they're going to go up in the short run. It doesn't mean they're going to go up in the next 6 months. It doesn't mean they're going to go up in the next couple of years. But over the long run, we know that markets always go up, and you can just own a piece of the markets if you want to see that upside. For those of you that are investors, my team at Briefs Media publishes a free daily report called Market Briefs, where we break down what's happening in the economy, housing, stocks, crypto, and global markets into a fun, witty, and quick 5-minute read. We have hundreds of thousands of investors that wake up to and read Market Briefs every single morning. It's an amazing read, and I promise you're going to love it too. And if you don't love it, well, you can just unsubscribe at any time because it's free. And as an added bonus, when you join join Market Briefs, you're also going to get my investing masterclass as a bonus just for joining. It's a complimentary free video that we're going to give you. So if you want to get Market Briefs for free, all you have to do is click the link down in the description below. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.